Nick Birbas was a 24-year-old waiter wiping tables in Manhattan when he borrowed $3,000 and launched himself onto the stock market. He had no experience, no help, and no broker. Just a lone computer and iron nerves. Now 25, Nick has his own apartment block and, of course, the shiny new Corvette.
I started out with 3,000, and currently I'm up to 500,000.
Is this your version of the American dream?
All my friends tell me so I would say yes.
A turbocharged economy, a raging bull market, and forecasts of more blue sky ahead. The good times are rolling in America, and leading the charge, as ever, New York. The red-hot heart of American capitalism, where they're all talking about a new industrial revolution driven by technology in general and the internet in particular.
Basically, at this point, KTC, it's up a half.
Like the steam engine which sparked the Industrial Revolution of the late 1700s, the internet is changing everything it touches. And at the cutting edge of the revolution is Wall Street.
So we are now 6 3/4 points above fair value.
No one's absolutely sure where it's all headed, but they all want a ticket on the ride. From the working traders...
When you're on top of that wave and you're surfing, you got to ride it to the end. And that's what you're on right now.
To the new breed of cyber millionaires...
It's just that you are shaping a completely new universe. That is probably one of the biggest socioeconomic changes that's ever hit the planet.
And the most respected economists.
If you don't get on this technology boom, if you don't compete, if you just kind of look around and resent that you're falling behind, you're going to just be left in the dust. You're going to miss the whole thing.
A couple of other companies to keep an eye on this morning. We've got an alliance to tell you about in the drugstore internet space. Rite Aid is going to own 25.3% of drugstore.com.
Scott Friedman is at the vanguard of the new revolution.
No one at 25. No support. Who's the man? Anyone holding it?
Friedman is a day trader, the purest form of stock trader in the world. He's also a millionaire at the age of 27.
Did you sell any?
No, I saw it.
From a converted office in a Park Avenue skyscraper, Scott and 150 other day traders rent the latest digital technology to bypass traditional stockbrokers and trade directly on the markets.
We're down 1 1/8 on Yahoo.
They feed off the volatility of high technology stocks, traded not on the big board, the New York Stock Exchange, but on the younger, nimbler exchange, the NASDAQ.
$10.50 a share. This is at the very low end of estimates. They were going to go from $10.50 to $13 a share.
Speed is everything. Scott holds his stock for, on average, 4.5 minutes. Today, he has $120,000 in play, and it doesn't take him long to turn a profit.
I bought 1,000 shares at 11.09 at 27 1/8.
Scott Friedman has the advantage of the newest, fastest technology. But he's not alone. Around the country, 8.5 million people are using their computers to play the market.
I sold another 300 at 3/4.
The trend is sending an already booming market through the roof.
So I've made money on the trade. It's being my own boss. It's living the American dream. I make my own decisions. I trade my own money. It's up to me.
Contrast the old way of doing business on the New York Stock Exchange.
It's 2,002 only. They give a 14,000, 2,002.
Bemis is looking 39 and about 35,000 if you want to buy 10 grand.
Dot on 5,000, 3,000. 4,000 done.
For more than 2 centuries, America's mightiest companies, GM, Coke, Boeing, have listed on the big board. Its stock value today is $12 trillion. Though, interestingly, the leaders of the new industrial revolution, the high-tech giants like Microsoft and Intel, are not on the client list. They prefer NASDAQ.
50,000 base sells in big orders. Sold.
Easing the sting of competition is the big board's own spectacular performance. Its key indicator, the Dow Jones Index, seems to have shrugged off gravity.
In the U.S. has been mostly straight up. You know, it was about 20 years ago, it was the 60s really, that we just seemed to be stuck at 1,000 or below 1,000 on the Dow in the 70s. And then the great bull market started in the early 80s, and it really got going in the early 90s. I don't think the market's going to go back down to 1,000, 2,000. Could it see 7,000 on the Dow now that we're almost at 11,000? Yeah, it could. But then it'll probably see 15,000 by 2005.
15,000 by 2005.
Yeah.
That's another 50% gain.
Yeah, another 50% gain, I think, is actually a very conservative forecast, and that's mostly because I think that the market is a little overvalued and is due for correction. But I think we are in a great bull industrial revolution for the global economy and a great bull market in stocks.
Stevie, Bank of New York, you bought 150, 35 3/4, leaves me a half for 226.7. Merrill sold, Penn Weber offering 136.
Greg, Boston too?
That gets him halfway home. If Goldman Sachs shows up as a seller, I have to know he's working a large order.
And this is one of the biggest bull pits, the trading room of Deutsche Bank.
Kevin, below 5 Goldman Sachs, I could use in a good size.
Steve Curtis has been trading for 20 years, offering his institutional clients the traditional full-price knobs-on service.
Hey, Sam, how you doing?
Buyer to broker.
Rocking and rolling today, Sammy? Yeah, much better.
The buy order goes to the floor of the New York Stock Exchange. It's the time-honoured way. But times change, and competition with the online traders is becoming intense.
What's that? Take another million. Yeah, compact.
A titan like Merrill Lynch, which until recently sneered at the online trend as a flash in the pan, has already buckled. Deutsche plans to introduce its own online arm soon for individual traders. But like many other big players, they aren't thrilled about the change.
Oh, that's not nice.
There's no reason for a traditional broker, not with today's technology.
Well, it's a, for first-time traders, it's a rude awakening when you're buying something that goes up every day, and all of a sudden you start losing real money.
Just because the last 5 years have been up, it hasn't been every day the same. The market goes up, you buy, you hold, you sell. Every day is different, and we have to adapt to it.
Lehman Brothers did blow away earnings expectations, so that may very well change.
But will they adapt? Accustomed to a rising market, will these talented amateurs know what to do when the market turns down? Such is the intoxication of this current boom, the very idea is quickly dismissed.
I'm not normally described as perverse. But you've got to be perverse to say the market's going to crash. It may correct, it may have a major correction, but with low inflation, low unemployment, low interest rates, strong corporate earnings, I would be a certifiable lunatic if I said the market was going to crash.
You could well call Richard Quest eccentric, but no one would ever accuse him of being certifiable. Over the last decade, the BBC's US business reporter has covered the stock market crash of '87, the jailing of Ivan Bursky, and the spectacular end to such former masters of the universe as junk bond king Michael Milken. And now, from his perch high above Manhattan, Quest watches the new era.
What you've got now is that this money machine, the internet, the information technology revolution, it's a hell of a mouthful to say, but it's a very profitable mouthful worth saying. The money is flooding out of Wall Street like the dam has burst. It is going into every nook and cranny, every avenue and street, every restaurant, every clothing store, every apartment hunting building, every limousine company. This is not a fad. This is a revolution underway that's affecting the way we do business and live our lives. And that's why it's so profitable.
Coordinate some deals in LA.
Okay. These t-shirts you can ball up into a little...
I would like to see
You can use as a weapon?
Wait, it's like some sort of Nerf ball or something like this?
In the revolution underway, these are among its very casual leaders, and this, its rather grotty headquarters. Todd Kreiselman and Stefan Paterno are the co-chief executive officers of theglobe.com, an internet site which takes the familiar notion of a town hall meeting, bringing together people of similar tastes and interests, and thrusts it into the cyber age. And the whole world can attend.
They're already reaching 300,000 high-speed modems.
A simple idea? Wall Street thought it might be the next Microsoft and invested big. When theglobe.com went public late last year, it was the biggest initial public offering, or IPO, in history.
The day of the IPO, people would, literally said, well, you guys are now worth $97 million each.
And how strange was it to find yourself overnight millionaires?
You're excited, and then you realize that you're not really overnight anything. What you are is you have a lot of stock that has a certain worth at that moment. I mean, literally, in the last 9 months since we've gone public, Steph and I have seen the stock price as high as, roughly $48, $49 a share. And I've also seen it as low as $12 a share.
I mean, as of right now, we're worth 30-something million each, and you start to realize that, what your net worth is going to fluctuate entirely unless you sell it.
In just over 5 years, Todd and Steph had gone from their dorm rooms in Cornell to being the toast of the town.
That may be the next major part.
And paying respect are some of this town's financial stalwarts. Among them, chief economist Brian Fabry, fund manager Barry Hyman, and market analyst Larry Wachtel. They just love the Globe.com boys and are helping to build their legend.
One of the fellows called this young fellow. They just brought the company public. It was worth $1 billion capitalization. He called the firm asking for Todd, and a woman answered. And it turned out to be Todd's mother. And Todd's mother said, Todd, someone on the phone? Like he called a home.
To begin with, they're technological geniuses in most cases, but they've grown up in an atmosphere of being computer professionals or computer majors at college who are really regarded as nerds, computer nerds.
In your opinion, do they deserve to get this rich this quickly?
No, I don't think there's a question of deserving. I mean, these people have invented a new product and a new science and a new way of life, really.
Isn't this, in a way, it's the classic American thing, get rich quick?
Well, let's separate out what the market says that they're worth and what the reality of their businesses are.
Yes.
These people who are creating these internet sites and creating the internet revolution, they're really artists. They are creators. They are really, they're not scientists, they're artists.
They're the inventors of the day, and they're being paid accordingly.
This is affecting hundreds of millions of people already. This is going to affect billions of people. It's going to change economics.
So given all this, are you the new masters of the universe?
I wouldn't say we're the new masters of the universe at all. I mean, this is, I think this is obviously beyond a flash in the pan. I think that what we provide is, we're going to be one of those people at some point over the evolution of the planet that has some impact in shaping it. That's exciting in itself. I don't think, if anything, that anyone is becoming a master.
Rather, this is a lot of different groups that are going to have an impact.
This is almost letting the people of the planet know that they are now the masters of the universe, and for the first time they can realize it and try it.
God, look at those bags under my eyes. Almost need shoes to match. To the New York market, it was a very quiet end to the week. And perhaps the sort of quiet end we're seeing quite a lot of, where in the summer people want to get off to their weekend homes in the Hamptons, Long Island.
Markets rise and markets fall. Internet companies soar like comets across the sky, and some will burn out.
Intel was also off.
But the trend Richard Quest believes is long, strong, and extremely broad.
Volatility. There has been the most extraordinary amount of wealth creation. And we're not just talking about the few people at the top who've got mega bucks, struck it rich, and have taken it all to the bank. You're talking about a deepening of wealth across the board. What we've got here is a broad-based wealth creation machine. And that's what it is. This is a money machine. It's printing it like there's no tomorrow.
Now, we'd come up with a model, for instance, where we're saying literally the same thing, but we're going to pay 10 cents as opposed to 50. So we would be doing the same thing to come up with our loyalty model.
A bit for everyone and a lot for a few. It's still capitalism, and they still talk the business talk.
Gobi is interesting. They have like it looks like 2 or 3 competitors.
But unrestrained greed isn't quite so good as it was in the 1980s. And these young entrepreneurs are a very different breed.
And you get all in all, they had like 150 employees at one point. And if they don't work it out, they just simply go out of business in a year, you know. Okay, hold on, here we go.
Playtime for the children of the high-tech revolution, or as they're sometimes called, the filthy rich. Scott Friedman looks the part, but like most of these rich young tech heads, he's not actually spending up big. The boat's borrowed. He and his wife Alison haven't even bought a new home. Yet.
Well, I think that there's a big difference between the guys of today and the guys of the 80s. In the 80s, it was sort of an elite club that if you were fortunate enough to be a member of, you were, first of all, trading firms' money and using other people's money to get your own wealth. Whereas today, it's up to me, and I want to just have a steady growth path. I mean, again, I'm conservative, and I just want to keep it growing. I look at this as a profession, not as a get-rich-quick scheme.
And the Globe CEOs are the same.
For instance, Steph and I still live in the same apartments we've lived in for the last 2 years since pre-IPO. We don't have cars, and we have huge planes. We're just kidding. We don't.
And you spend a lot on clothes, I guess?
Yeah.
Oh, yeah, you can tell.
They're not ostentatious. They're not rambunctious. They are not lively individuals. Look, just look at the leaders. Look at their mentors. Look at their heroes. Bill Gates.
Having dived into the money pool at the deep end, it's now a matter of swimming like crazy. The Globe.com still hasn't turned a profit, and that's typical. To buy .com is to invest in the future.
Give me some bread.
Most internet companies will fail. A very few will succeed spectacularly. It's the trader's job to pick the winners and avoid the splat of a bursting bubble.
While you're doing laps and you're coming up, I'm sitting there like watching the grease drip off the burger, like lapping it up. Well, one of us ain't gonna make it.
Tell them again for lunch.
Is there a bubble going on in internet stocks?
Well, I don't describe it as a bubble. There's a phenomenon with internet stocks versus all other stocks. That's been going on since the internet started. That phenomenon continues. As long as people are inspired and think that the internet is something huge and different, the valuations will continue to be huge and different.
You know what? It is no different than when the cable industry started. It's no different from when the first television networks started in the early 1900s. The reality is anytime you have a new set of companies that can capture the potential for a massive audience, they're going to see those high valuations. Valuations because they can have access to all these users.
The old-timers like us wait for the day of reckoning. Wait for these people who are speculating to be smacked down. Everybody's invested, everybody's happy, everybody's making money. Something's wrong here.
Hopefully there is no end. I mean, there is always an end to our individual lives, but I think the internet technologies, the technology revolution has already created an enormous amount of prosperity for all of us worldwide. I think that's just going to continue. There's no reason why we couldn't extrapolate that to the moon at this point.
In New York, they're partying as if the good times are here to stay. But then the inhabitants of the financial capital of the world have always been extremely confident, just as they've been before every big stock market crash in history. Perhaps they're right, and this time it is different. However it turns out, at the very end of a tumultuous century, it does seem appropriate that a new technology and a new generation are now leading the band.